Hello, YouTube. Today we want to ask ourselves whether or not the stock market is going to break bullish and whether or not we should believe it, because as we can note here, we have our falling wedge on the S&P 500 and it is right at a key area. And with a big day today and QQQ also closing out green and going back to green on the week, what we want to know is whether or not this pattern is playing out here. Again, this is a falling wedge. It is the pattern we were looking at on the weekend deep dive to give us a little bit of relief. I'm noticing some really positive signs. I'm also noticing some warnings. So in today's video, we're going to try to find out whether or not the stock market bull break is real and whether we should believe it. If you're enjoying the stream or the video at any time, I would really appreciate a thumbs up and make sure to drop me a comment. Do we believe this or do we not? I don't know. As of right now, I'm seeing a lot of positive signs, and the S&P is now up by about 2%. And we made it to 399.45 within a whisker of getting to 400, that all-important area. So let's jump in and find out what we got. I just want to give you a bit of a preview in case you did not watch the weekend review. That'll be available at the end of the video. And if you want to watch it, I encourage you to do that. So first thing to note here is just that we have again, a falling wedge, which means that we have progressively lower highs and lower lows. Eventually, these prices meet because the selling is exhausted. And what'll happen is that we're actually going to, again, if we're bullish, we're going to break out, we're going to backtest, and then we're going to advance. And that's what I would expect to see happen here. This is bullish because it gives us multiple entries. We can note here that we have a inverse head and shoulder setting up as well. So if we are currently about right here on the bull break, as we look over to where the S&P is right now, the question is, what would it take for us to actually go back up? And do we even want to take on the risk right here? Well, if we're looking at a weekly chart, what it means is that we need to wait until we get the Friday close. And this is very important because there's some really big option clues this week, including a few more things. So without further ado, let's go further. I'm going to re-summarize my thoughts here in terms of the inverse head and shoulders on the chart here. So what I want to show is, let's actually go to QQQ because I have less stuff drawn on here. So again, this will come into play in a moment here, but what I would expect to see is something like this. Again, where we have this big green line, which is a really important area. So I would expect that we're going to break this downtrend, we're going to back test 300, and then we're going to advance. That means that we're going to have multiple times or multiple entries to get in. The question as well is like whether or not we even believe this, because if you remember, the last few times we had these Fed speakers coming out, FOMC or Fed minutes, it led to a trap. So the first trap was right here when Jerome Powell spoke. Second trap was right here when we heard about Jerome again. And now here is this the third trap? That's what I don't know. And the reason why I say I don't know is because we don't have a lot of volume. And without a lot of volume, it's very hard to have conviction. So without conviction, what do we need to keep in mind? We have to keep in mind that we're currently in a low liquidity environment. We had a record reverse repo, which means that we're actually removing liquidity from the system. So if we're removing liquidity from the system, what does that mean? It means the moves will be dramatic. They will be dramatic going up. They will be dramatic going down. So as we look here to the S&P and we add in the volume profile, we note these pockets of supply up here at about 430 and these pockets of demand down here at about 330. However, what do we have in the middle here? We got one single bar. This bar right here at about 400. So the reason why this is important is because we need to chew through this supply before we can make it to 410 and higher. And this is what I would call no man's land. There is a big hole between 330 and 430. It's nearly 100 points. That is a massive, massive hole. So again, if this is a trap, we're likely going to resume back down tomorrow. I want to point out one more thing here, and that's just the difference that I am noticing here on the daily chart in regards to what is actually happening. So I'm going to look at my notes that I was looking at this morning in a moment, because when in doubt, I like to go back and look at my notes, because they're usually going to serve me well when I'm not in the heat of the moment. So here we can note that we got a massive dip buy and a massive dip buy that led to follow through. And that's what I would expect to see happen if we're really bullish. And then again, what do I also see forming here? A W, which means it could be a win for the bulls. It should be a win for the bulls. Everything kind of says that we're due for relief, but we've been due for relief for some time. So now that we understand where the market is at, there's a few more things for us to look at. In terms of just understanding what price action we actually got today, I'm going to look at some of the notes that I share and pre-market to our members. So here you can note that for May 25th, I was looking for 392 and 390 are key lows. 390 is an inverse head and shoulders potential like 387 that we had yesterday, which is where we bounced. 390 is our 4 p.m. apex today, or the pink arrow. And then the last line here says, Fed minutes, I believe if we're going to get an oversized move, it will be up. Thank you, bulls. We went up. Nice job. So what this means is that what I was expecting to see happen today fulfilled. But without volume, we have to kind of ask ourselves whether or not this is real. And then about 1 hour before the close, maybe an hour and a half after we got the minutes out, these are the notes that I gave to myself. Again, if this is a bullish move with continuation, meaning it's not just going to be today, it's not going to be a trap, we're going to go to 400 and we're going to go higher, we should see the S&P end of day target revising above 395. That did happen. We did get a revision above 395. A pump into the close. We're at least holding. Right, that's the question here. Did we hold? I don't know, right? Green hour, red hour, it was OPEX. So here we go, right? It's not all that bad, but that red bar is telling me that people were pretty excited to sell. As excited as they were to buy, they were more excited to sell the close. It's not a good look. Again, one data point is not going to be the Bible. It just means that we're trying to build a case. If we're due for a bounce and we could go a lot higher, do we believe it? And should we watch it? Open interest at 400 calls for Friday converts to, open interest volume at 400 calls for Friday converts to open interest. Meaning, are they just bullish for today, meaning OPEX, or are they bullish through to Friday and beyond? Finally, I would want to see a strong hourly volume in the final hour. Right now, it's still soft. So that did not happen. So what do we have? We got a check, unknown. This we'll find out tomorrow, and this is unsure. In terms of what the Fed actually said today, does it really matter? The price action is more important. However, there's also a really important data point here from the CBO, or the Congressional Budget Office, which is telling us that they're boosting their GDP growth forecast, and they also say inflation has topped out and will cool by 2024. Whether or not they're right or wrong, I don't know, but the bull case is building some momentum. All we're lacking is the actual follow-through. Like, come on, bulls, where are you? So as a reminder, let's look and see whether or not we have any of our risk appetite gauges actually flashing a bullish signal here. S&P currently below 400, but it got awfully close. It got to 399.4. QQQ still below 300. And again, as we noted on the falling wedge, that QQQ above 300 is a bull break. It's also going to be above that yearly low from 2021 at 297. BTC was above 30K and now it's not. Right, same thing with ETH. It was above 2K and now it's not. So we have none of these which are confirming that we're currently going risk on. And with the potential of this being another trap, I'm opting for safety. So by opting for safety, it means that we might miss a little bit of the move, but we're going to be de-risked a little bit. All right, just before I get to the options and do a couple of charts, let's have a look at the psychology chart because there's only so many days left in the month. And if we are going to, again, you probably hear me saying, should, could, maybe, might, should. It's because honestly, I don't really have super high conviction in these in these moves. The volume is so low. Looking here on the daily, woof, right? That volume stinks. So if this is such a good price below 400 and we're going to go to potentially 440, even 450, why are they no excited to buy? I don't get it. It just seems like they're not really motivated. I know I'm not. I'm definitely missing some opportunities, but opting for safety means we're going to survive to trade another day. So what this right here is basically showing us is that the S&P 500 as of right now is very close. This is from the weekend. We see here that we have the psychology chart, and what I want to focus on here is going to be this pink line from the megaphone, and then the curl that we have setting up here. So we got a break of the pink line, a break of the pink line, and now let's get an update in terms of where we are. So if we look here to our monthly chart on SPY, and we just zoom out a little bit here. Man, that actually looks a lot closer to what we're looking for. It almost looks bullish, right? Oh my God, is Justin finally getting bull? Again, a dead cat bounce turns into a reversal when we take out the relative low. So we still have to make it to 412, but we're seeing some progress, right? It's been a while since we saw bullish progress. So compared to here, it actually almost matches this perfectly. We get a lower tail, it comes back up, and then booms, right? Goes all the way back up. So if this pattern's going to repeat, we should be looking for an upside target to roughly the red line. Where is that? It's at 454. That is our current head and shoulders neckline. So on this bounce here, if it's real, we should be able to go higher. I don't know if we will, but again, that is the potential for where we could go next if we're believing this move. Now let's flip over to some options to see whether or not option buyers and sellers believe it. Were they positioned before the move? And if so, what was it? Oh no, they were positioned there. So what we're looking at here is our new system called the Algo, which we're going to be launching soon. If you want to click on the link in the description, you can find out more about that. But what we're looking at here is that on a day when we should be bottoming, we're seeing bearish flow. We're seeing a 1.21 put-call ratio, and we got a whole bunch of puts. Oh, geez, right? When are we ever going to get rid of these stupid bears, right? Man, this kind of sucks. All right, well, that is one data point. It is not everything, but now what I want to look at is whether or not there is options motivation beyond right now. And that note that I made, I forgot to include one. I thought they were going to walk it down to closer to 395 because look at all these puts. It looks like max pain. So the big stacks are right here at 395. And over on the call side, oh man, is it busy, right? Ooh, woof, 395 to 400. So this is where max pain would have been at 395. And the fact that we closed at 3975 basically means that they split the difference between 395 and 400. And there is bull motivation here, right? They were motivated, right? They were pretty motivated. That's 300,000 calls. That is a lot. It's a lot of calls. So now what's more important is to look through to Friday, because if this is a one and done or a trap, we're not going to see follow through. And I already had a look ahead of time, so I know what I'm looking at here. Looking here, we have pretty much the same levels. We got the big volume starting here at 395, going down to 390, where there also is open interest. And then on the call side, oh baby, look at that. There's a whole bunch of calls here. Ooh, been a while since we saw that. So we got 200,000 calls here at 400. So if they want to get us above 400 into Friday, they are motivated. They need to do it. And they need to buy calls, not just for Friday, but beyond. There is nothing on the June chain that gets me excited. All right, moving forward. Let me just make sure I don't have any more of my notes here that I need to get through. And we'll have a look at the heat map. The heat map here tells me that if this is the bottom, I'm noticing that the trillion-dollar companies that have been the most sold off, notably Tesla, Amazon, Nvidia, they're flipping pretty bullish here, right? 2 to 5% each. We're noticing that we also have QQQ leading SPY, but we're seeing some divergence here. We now have nearly 6 points, 7 points in divergence, meaning we used to be tracking nearly to the dollar, but ever since OPEX, we're now seeing that actually fizzle out. And then going down to here, we also note that we got almost every major ETF green, excluding healthcare and excluding utilities. One of the big culprits we have to keep in mind is going to be the dollar. So the reason why the dollar is important is because it is inversely correlated to the S&P, and it closed up on the day. So this is getting my radar buzzing a little bit because this is not what we want to see. We don't want to see the DXY up. We want to see it down if we're bullish on stocks. If we're bears, we want to see DXY up. And I'm just going to zoom out here to a weekly chart because this helps us to understand what is happening. The bulls already won. The dollar bulls won. We got a bullish pattern here. We're currently backtesting. We're falling outside of this yellow pocket, which means that if we're going to get a breakdown, we got to pretty much do it now. Otherwise, this is just a handle. It's a handle on a cup and handle or just waiting for continuation. We got a golden cross, which is also bullish. So we pretty much have to fall back below 100 to break this pattern. I'm not sure it's going to happen, but the wheels are starting to get in motion. We're halfway there, from 105 down to 102. Next thing we have to look at is just going to be gold. So the reason why I want to look at gold is because I'm also noticing that it is starting to get bullish. And generally speaking, gold is going to be inversely correlated to Bitcoin. So if gold is going up and the dollar is going up, it's flashing us a warning. I would call it a yellow flag, not a red one. But we have to listen to the signals because gold is bullish. It's over the 50 weekly. It's almost ready for a fresh bull break over 1861. And yeah, I'm bullish on gold. So I think it's actually going to go up. Now, the next thing I want to look at is going to be SPY. Actually, let's look at Bitcoin just to finish off the story here for these commodities. So Bitcoin, again, did we save the low? Yeah, we did. So we still have not broken this low. I'm personally trying to bottom fish crypto right now. Again, keyword there being bottom fish. This pattern has to break bull. We got double inside bars now, and we're currently inside that demand pocket where every time it's hit, they've bought it. So if they don't buy it this time, it means that buyers are no longer excited to buy Bitcoin below 30K. That's the takeaway here. We're no longer trending up. We are below our 50 MA, which means we're likely going to be headed lower. How low? I don't know. Drop me a comment. Let me know. All right. Video's already a little bit longer, but I think there is a lot of value jam-packed into today's video. So let's get forward and look at a couple more charts just to wrap it up. So the ones that we talked about before, let's look at SPY again, just really briefly. I've mentioned what I want to see. I want to see us above 400. We got to get there ASAP, right? By Friday. We got to get above there by Friday. So if you want to see what happens, come and stay tuned to our Friday live stream, which is going to be for the final hour. And we got to see what happens in no man's land here at about 400. Can we bull break and push to the supply pocket, or will we bear break and push down to the demand pocket? I don't know. I'm hoping it's bullish. QQQ. Similar story here where let's wait till the volume profile updates. All right, we're kind of hanging out here in no man's land. We're definitely closer to the supply pocket than the demand pocket. So keeping that in mind, we have to see QQQ start to bust. It can't just go up a little bit. It's got to start busting. All right, now let's look at Tesla. Let's remove the volume profile. So Tesla is still in a bear break here. It's trying to go back up, but man, is this thing so slow. I don't know what's going to happen. I want to see Tesla start to lead, though. I don't know what it's going to do. Looking at Apple, Apple looks okay, right? So Apple's still a leader, absolutely. It still looks good here. And I'm just remembering that I think we have Nvidia earnings after the bell today. So what I actually want to do is flip to those other two names, which actually did okay today. That was Amazon. Amazon did okay today, but it's still red on the week. So, right, it's only recouping losses. It's not actually going up. And it's printing progressively lower lows. And it is inside of our demand pocket here. So this should be an area where people are excited to buy. And we keep printing lower lows. So it's not a good look at all. Oof. Oh no. Nvidia down. Oh no. Oh no. Do we believe it? Oh, woof. That's a pretty big move down for Nvidia. So again, this is a preliminary one. I have no idea what the earning report is. I have not reviewed it yet. Earnings are out. Clearly they're out. I don't know what the result is, but this is going to leave an overhang for tomorrow. So again, that could be that this is a trap. Make sure to leave me a comment. What do you think? Is this a trap or not? And we are now solidly back inside the bottom part of this pennant, and we're below the green line at about 160. So it does not look really hot here. With that said, if you enjoyed the video, I would appreciate a thumbs up. And if you could drop me a comment, I would really appreciate that. We put out videos every day. I encourage you to subscribe to the channel. And if you want to know more about my weekend prep or how we got to this S&P bull pennant breaking bullish, the falling wedge, I encourage you to watch the video that'll queue up right now. Otherwise, I thank you beautiful people for watching, and I look forward to seeing you tomorrow. Thank you.